Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hour Show. Boy, the market just can't decide what it wants to do. Can it? Up, down, up again, down again? It is just, it seems like a continuation pattern. It seems like since the big fall in the S&P 500 that you see on the chart here, that we're starting to get in a continuation pattern where we're going up and down, but we're staying within certain levels. Like, for example, on the S&P 500, it closed at 43.26 today. Well, that's the lowest the candle has been over the past 4 days. Now, the wicks, they are not going down quite as far. Yesterday and today are almost identical. So we're trying to find some sort of a bottom here. Maybe we won't get down to as low as 2200 like I thought that we could, especially once we made that really big fall on the 24th. But since then, the falls haven't been as steep. They seem like they are because certain individual stocks are falling quite steeply. Look at the EV sector today. That took a hard hit. But Apple in after hours today is doing great. They had record revenues. So we'll go over that in just a moment. But yeah, I just wanted to point this out on the S&P 500. We also aren't getting as high on the top of these candles either. We seem to have reached a peak somewhere around 4407 for the candles, both on the 24th and on the 26th. That was the top of the candle. So it seems like maybe we're trying to balance out a bottom here, but also a lid. So we're just going to move sideways now for a little bit, maybe until March, when the Fed will raise rates. Maybe that's how long it's going to last. Maybe February is going to be a dead month, and nothing's going to happen. That could be a bonus, right? That could be a plus. It's better than going down slowly over the month of February until we get to March and we have the first rate hike. So just something to think about there. So yes, thank you for joining me. I'm glad you're here. Remember, the most important thing is what's on your mind. So if you have a question, leave your ticker symbol in the question in the comments and we'll go over it live during the show. Otherwise, I've got some stocks I want to talk about, like Tesla. I want to do a deep dive. We watched the earnings yesterday on the show, or listened to the earnings call on the show yesterday. So I'm going to do a deep dive on Tesla and their earnings and the warning that they put out about supply chain problems persisting through 2022 really hurt the EV sector as a whole today. And a few thoughts on that when we get into the deep dive on Tesla. And I'll go over Apple's earnings, Robinhood's earnings. They came out after the close today. Not so good. And to me, that was anticipated because the big banks last week and Jeffries before then, their fixed income trading was down. We also know that in the market, retail investors are kind of taking a step back, not in the market. So Robinhood, their trading went down for this quarter, not surprisingly. Nvidia, sure. NVDA for Nvidia. This one, it's got some more falling that's going to do. I have a stock alert set for Nvidia at $200. I think it can get to that level, quite frankly. It is falling into the same kind of pattern that the S&P 500 is falling into. But for Nvidia, it's right on its 200-day moving average. So you can find 3 out of the last 4 days, the candle is sitting right on that 200-day moving average. Today, there was a big swing in price for Nvidia. They ended up down 3.6%. I really do think they could get to that. There's a big probability that they could get to $200. And if they do get to that level, that's the area where I would start adding to my position in Nvidia for the long term. Short term, though, anything under 220 seems to be like a good area because there's support right here around this 200-day moving average, which right now sits at $221. So anything under that 220 area could be a good short-term trade. Short-term being over a few weeks, not necessarily over a day or so, just because the convictionless rallies that we have. And I think it's going to be this way all the way until the rate hike actually happens. I think the month of February could just be a kind of dead month where we just kind of skip over it, right? I mean, RSI, the relative strength for Nvidia is down to 21.6. That's oversold, but it is still remaining at that level. I mean, it's been oversold now for goodness, for several days, going back to the 20th of January. Nvidia has been oversold since that day, and it's still gone down in price. So I think this area, excuse me, between the 200-day moving average and a $200 price target going down, I think that's the good area where you can start nibbling on Nvidia. I wouldn't do anything over 220 with Nvidia right now. I think that's getting in, and it may cap you off at a top, at a lid, at a point where you're left holding the bag for a while before you can get a return on that. So under 220, okay. Under 200, excellent for Nvidia. You're welcome. Absolutely. Anything else you want me to look at, I am here to do. All right, so I'll go back to the SPX, which is the S&P 500. And again, I think it's just going to move sideways or maybe a slow bleed out over the month of February. But I think February is going to be a negative month for 2022 until we get that rate hike. Now, stocks, again, we have this flip-flop where it looks like at some point during the day, it looks like we're going to be green. And we might end the day in the green, but it is every day now for over a week, it has turned negative, and today was no exception as investors kind of balance out better than expected economic data and prospects of rate hikes while monitoring corporate earnings, which some of the corporate earnings are good. Some of them, Robinhood, not so good. The U.S. economy expanded by as much as better than expected, the 6.9% in Q4, while the Fed did signal yesterday it may tighten monetary policy faster than anticipated, with some market participants now betting on 5 rate hikes. I'm not one of them because I think that sounds a bit crazy, but 4, possibly. The Dow Jones was little changed after adding more than 600 points earlier in the day, and the S&P 500 fell 0.5%. The tech-heavy Nasdaq 1.4% down after being up more than 1.6% higher in its session highs today. Small caps really got hit today, with the Russell 2000 sinking over 2%. On the corporate front, Tesla, it plunged almost 10% after the carmaker warned about supply chain issues that could persist throughout 2022. And that did hurt the entire EV sector today. And I think that's partially why Lucid got hit so bad today as well, because of what Tesla said. And if Tesla is having persistent problems with inflation, then you bet the smaller Rivians and Lucids of the EV space are definitely having input cost inflation problems as well. Now, Intel was also down 7% on a mixed outlook for the first quarter. Also, earnings from McDonald's, they actually missed, and the company's stock did slip about 0.4%. Meanwhile, Nasdaq soared 8% on news that Pershing's Bill Ackman bought 3.1 million shares. But I'm not sure how Ackman can see margin expansion at Netflix as a benefit. Can you? I don't think Netflix has margin expansion possibilities at this moment. Look at Disney. Disney has multiple verticals for each of its IP that Netflix does not have. Now, that is margin expansion. When you can release a movie, release a TV show about it as well, release merchandise for it, and have a theme park around the idea of the movie. You've got a lot of verticals and a lot of different ways to make money off of a single IP that Netflix just does not have right now. I know they're trying to work on opening different channels, but that's just not happening for Netflix in the short term. And I'm not sure where Ackman thinks that Netflix is going to do that. And Netflix definitely cannot do it by continuing to raise their prices on the consumer. At some point, the consumer is going to say, no, no, thank you. We'll watch for a month so we can binge our favorite show, and then we're going to cancel for every other month of the year. That's what's going to happen in streaming if prices continue to go up and up and up. And I know the prices do have to go up as more content is added and companies are spending more on producing content. But at some point, the consumer is going to be fed up with the price continuing to rise. It's just nature, right? Okay, I have to mention our top 10 stocks guide to give investors a path towards quality stocks in this wild market where stocks can go up crazy and down crazy all in the same day. We've put together the top 10 stocks list in categories like value, growth, dividend, and momentum. These stocks are constantly updated, so you always have the best names available. So click the first link in the description and become a member to get instant access to our top 10 value, growth, dividend, and momentum stocks. We've done the research so you don't have to. All right, the US dollar index, and we can put that into TradingView, and there is a link in the account in the description for a free account to TradingView. Just type in US dollar and you can get the US dollar index really easy. And here it is. Here's the US dollar index, and the dollar has been flexing its muscles over the past few days. I mean, look at yesterday, a wild 0.5% move, and that's not typical for the dollar. I know most retail investors, they don't really look at the dollar and whether it's flexing its muscles or not, but it is important to the overall story of the economy and the market. Understanding all the different mechanics, I know it's frustrating and hard sometimes to really get into it, but once you do, it starts to open up windows and ideas in your mind for where to invest your money, where are real high quality stocks that you can bet on and win on. So look at the US dollar since June of last year. This looks really good. This is what you'd want to see on a stock chart, up and to the right, right? So the past few days, though, the dollar has been really strong, and it was flying high today, bolstered primarily by the dollar's strength against the euro and the yen. This move comes in the wake of yesterday's FOMC announcement and Fed Chair Powell's press conference. The latter, the press conference, is the bigger driver in my estimation, as it became clear in the Fed Chair's remarks that the meeting, inflation is the mandate. Inflation is now the chief objective. That's where the Fed is going to focus on. Now, translation, rate hikes are on the way, and we know it. A stronger dollar can actually help tamp down some of the inflation pressures in the US by reducing the cost of imports and dollar dominated commodities. It hasn't exerted any real pull there yet, though. However, where it could start pulling more in the near term is the narrative involving emerging markets and the risk those holding large amounts of dollar dominated debt face with a stronger dollar, making debt repayments more costly. This narrative could pick up since the rate hike expectations are unlikely to be backing down anytime soon, which in turn means the dollar could flex its muscle some more, and continue getting stronger. All right, gold was on a decline today, down 1%. You can type in gold, GOLD, on TradingView, and your very first, just click enter, and you've got it. This is gold, 1796. The past 2 days, gold has dropped pretty significantly. It actually got up here to a recent high here of 18.53 an ounce. Didn't beat that big run that it had back in November, but nevertheless, it is running along this trend line here, and it's using it as resistance. So it's running along, it's finding resistance, it falls back down, and then it's been bouncing back up. But today's and yesterday's fall were pretty substantive. Now, it came down in the middle of a support area, so it's really 50-50. Is gold going up, down? It really could be a coin flip at this point. I think because of what Powell said yesterday, that really affected gold yesterday and today. So with inflation being the focus and gold is supposed to be a hedge against inflation, it just doesn't play out the way that you'd want it to. All right, Bitcoin, BTC USD on TradingView, and I use Coinbase for the data there. It's finding support, which is positive. So it's staying around this 36,800 level, and you can see the price didn't move a whole lot today. That candle is really small. Same with yesterday and the 2 prior days before that. It's really holding in this 36,000 and some change area, which isn't bad. This is a great place to accumulate since it seems like the fall has stopped and it's reached an area where it's found support, and I think it's really at that 35,600 level. I think that's the real support area because today, the day before yesterday, the lows were in the $35,500 range. So I think that is a good place to look. Set a stock alert for that price point, 35,000, just 550. Split that down the middle there. When the alert goes off, buy a little. $10, $5, 5,000. It really doesn't matter. Just start accumulating and building on what you already have. So 35,550. Set a stock alert. When it goes off, get a little. That's what I've been doing. And I think Bitcoin, it's got a great future ahead of it. Right now, we're just in a bit of a slump. Really, that's it. Since reaching that $69,000 high, it's been in a downtrend. It finds support, it falls, support, it falls. You can see the three yellow boxes there where Bitcoin has done that over the past couple of months. Really, that's it. A couple of months. So yeah, 35,550. Set a stock alert, and you can get in at that point. That's what I've been doing. All right, Ethereum, ETH, USD, and then again, Coinbase for their data. Ethereum, about the same way as Bitcoin. It's finding support right around that 2325 area. Yesterday, it didn't quite get that low, but today it did, day before. So for the past about a week now, that level, 2325, is about the low that it's been making. Again, set a stock alert and start stacking on Ethereum. You can do it $1 at a time, really, if you want to. Especially if you're in one of those easy trading apps like Robinhood or Webull, and you can just go in at a couple bucks, but just start stacking it. It'll pay off in the long run. And these are long-term holds and bets on the future of not just Bitcoin and Ethereum, but the technology behind it, blockchain. that is going to be integral in our society. So that's what I'm betting on. The whole blockchain technology. All right. Now that we've looked at gold and Bitcoin and the strength of the dollar, let's talk about the world's most valuable company, and that is Apple. Ticker symbol AAPL in TradingView. And Apple has been pretty strong in this environment that we're in right now. Yeah, it did come down when the S&P fell, but it's been doing much, much better. It is up 5% in the after hours, and that's because they had record revenue for their earnings for Apple today. Now, if I go here and I tap here. There we go. So Apple today, Q1 earnings EPS of $2.10, and that beat by 21 cents. They had revenue, get this, sit down for it, $123.94 billion in a single quarter. That's 3 months. And that is a new record high revenue amount for Apple. And that is 11.2% gain year over year. And that beat estimates by $5.41 billion, led by, get this, strength in the iPhone. A lot of analysts out there were predicting iPhone sales were going down the tube. Nope. iPhone sales, 71.6 billion worth of the revenue or in sales during the quarter. Service revenue rose to $19.5 billion in the quarter, up from $15.7 billion a year ago. Also aiding the quarterly results was strength in Mac and wearables divisions, with Mac revenue coming in at $10.85 billion compared to $8.6 billion a year ago. Apple's wearables unit, which includes the Apple Watch and AirPods, that generated $14.7 billion in revenue during the 3 months, up from $12.9 billion a year ago in the first quarter of 2021. All right, so that's Apple's earnings. Fabulous job, and good job, Apple and team over there. You really came through for your shareholders there on this quarter with record revenue. All right, a company that didn't quite come through on for shareholders was Robinhood. I can't believe I almost said Apple again. That would be embarrassing. Hood, HOOD on the chart. Robinhood, it did not make it, and we did not think it would. We called this a week ago when the big banks came out and reported trading slowed down. Revenue for trading slowed down. Fixed income revenue at Jefferies was down 49%. So I knew Robinhood was not going to be able to cut it, and it didn't. It missed on its earnings. The stock is down 6.4% during regular session, but then add on another 12.3%. It's dropped in after hours since its numbers have dropped. This stock is, it might be becoming a penny stock. Can you imagine that? Robinhood becoming a penny stock? Wow. It's at $10.18 right now. If I look at this on the chart, look at this sharp decline. It had a 52-week high of $85. It came on the market at $38 a share, and now it's down to $10.18. This is a fall, boys and girls. This is a big one. All right, so their EPS came in at a loss of 49 cents a share. Let me see if I can pull that data up here. Okay, there we go. All right, so Robinhood EPS, a miss or a loss of 49 cents, which missed by 5 cents, and they had revenue of $363 million, which missed by $3.64 million. For the full year 2022, Robinhood expects total operating expenses, including share-based compensation, to rise 15 to 20% year over year. Meanwhile, it does expect share-based compensation to fall 35 to 40% from a year ago. Now, crypto transaction-based revenue that came in at $48 million, which is a fall from $51 million in Q3. Okay, got that. Options trading. Options transaction-based revenue, 163 million versus 164 million in Q3. Equities transition-based revenue, 52 million versus 50 million in the prior quarter. So they actually went up by just a little bit. Monthly active users of 17.3 million, that fell 8% from 18.9 million at the end of Q3. So over the past quarter, Robinhood has lost 8% of the investors on its platform. They've just gone away. Poof, vanished. 8%. It's over, was it over a million or just about a million? Around a million. Around a million people just poof, disappeared. They're not investing anymore. They probably have money in their account, right? They probably have stock. Maybe they have some crypto, and they just walked away, leaving it in there. Gonna look at it when the markets are going up. How's it going, Mario? Yes, diamond hands are in pain. They are hurting, but that's why they're diamond. They can't be broken, except for maybe by a stronger material, maybe. All right, staying true. Let's talk about the real winner here. Even though investors got a little nervous on this one, Tesla. Let's talk about it in greater detail. Now, we listened to the earnings call yesterday, and I thought the earnings call was very enlightening. I thought that at points it was like listening to Elon Musk and his team brainstorm. And it was really fascinating, especially when they were on this segment talking about how interconnected a home could be. Now, it dropped below its trend line. It almost got to its 200-day moving average, and most likely it's going below that. It's most likely going below it. And there's two reasons for why. Why did Tesla fall 11.5% today? Why did Lucid fall how much? Over 10% or something like that? Why did Rivian fall? Why did these EV stocks, when there's so much demand for electric vehicles, why did they drop by double digits today? Two main reasons. Number one, rate hikes. Number two, persistent supply chain problems. Those are the two reasons. But we'll talk about it in more detail. So, staying true to its recent form, Tesla, ticker symbol TSLA, overcame supply chain constraints to exceed EPS and revenue expectations for the fourth consecutive quarter in its Q4 21 results. Now, Tesla's creativity has enabled it to embed chips and other parts from new suppliers while growing enthusiasm for electric vehicles in general continue to provide a strong tailwind. Now, the inflection point for the EV market that CEO Elon Musk described during Tesla's Q2 21 earnings conference call in July has clearly been reached. That's right, it's been reached. In addition to Tesla's impressive Q4 21 earnings results, the EV maker's breakout has been highlighted recently by the demand for Ford's, ticker symbol F, Ford's all-electric F-150 Lightning pickup truck, and upstart Rivian's, ticker symbol RIVN, and Rivian's plans to sharply increase production to meet demand. Demand is high for EVs. Bullish trends in the EV market tell only part of the story, though. After recording many years of unprofitability, Tesla is now a well balanced machine with significant earnings power, thanks to steady improvements in manufacturing efficiency and economies of scale. These gains are best expressed in Tesla's automotive gross margin, which expanded by 648 basis points year over year to 30.6%. It's unlikely that Tesla will maintain that level of margin improvement in fiscal year 22 as it opens new factories in Austin, Texas, and Berlin, Germany. However, as Tesla is delaying its launches of Cybertruck, the Semi, and the $25,000 car, those new factories may initially focus on producing Model 3s and Ys, a process that the company has already mastered flat out. Pushing out the new EV launch dates didn't change Tesla's outlook of achieving 50% average annual growth in vehicle deliveries over the multi year horizon. In fact, Elon Musk expects fiscal year 22 delivery growth to exceed 50%. Despite the uptick guidance, the stock is stuck in reverse due to the following three or four items. There's concern that the launch delay will cause Tesla to lose ground in a fiercely competitive market. Ford, General Motors, ticker symbol GM, and Rivian have all electric pickup trucks on the market this year, creating fear that Tesla's Cybertruck will fall behind. I don't think so, but many investors do. I'm not the majority here on this one. Musk believes that launching new vehicles when the company is already parts constrained, it just doesn't make sense. That's a sensible view in my point. But the consistent moving of the goalposts, let's call it, is a source of frustration. Musk's plan for Tesla to have fully self-driving cars by the end of this year, 2022, it's not resonating well with investors, considering the substantial issues that Tesla's autopilot technology has encountered, including its role in a dozen or so crashes that spurred an investigation by the NHTSA. Launching a truly self driving EV this year seems like a far stretch to many investors. I think it's possible. But the bottom line isn't necessarily what I think, it's what the majority thinks. And that the growth story, and this is the big reason why Lucid is down and other EVs are down too. The growth story for Tesla and the growth story for other EVs in fiscal year 22 has lost some of its luster in the eyes of many investors. With a PS in the 25 times neighborhood, the stock has little wiggle room for the possibility if growth expectations change. The main takeaway is that Tesla continues to operate at a high level in a very challenging environment as EV demand remains red hot. But its plans to delay new vehicle launches remove a key fiscal year 22 growth catalyst in the eyes of many investors. But what do you think? Do you think Tesla's call to not introduce any new vehicles is a smart call? Or do you think it's a better call that Tesla focuses on what's working and getting its Austin and Berlin factories up and running at full capacity? Because over the past several quarters, Elon said that the company at any of its already established factories are not operating at full capacity due to the supply constraints. So, what do you think about it? Which side of the argument are you falling on? Should they release that new $25,000 car, or will full self-driving be on the market by the end of this year? Let me know in the comments below what you think about Tesla. All right, let's talk about Lucid for just a moment. Now, I did LCID. Now, I did mention them while I was talking about Tesla, but Lucid fell pretty hard today, 14.1%, sub $30. It's now, it's bounced about a percent in after hours, $28.96. It came down to its 200-day moving average. We're seeing this with a lot of stocks, a lot of stocks. They are falling to their 200-day moving average, including the S&P 500. That indice is also at its 200-day moving average. Nvidia, 200-day moving average. Lucid, 200-day moving average. It's acting as support, but it's very wobbly, very wobbly. And I think they can go lower. So I know there are mixed feelings about what Meet Kevin said about selling out. $20 million gone out of the market. Be back in a month. With companies hitting their 200-day moving average and gonna fall below it, maybe that plan makes sense. Maybe February is going to be a dead month where either stocks are just gonna move along sideways, fluctuating up and down below that 200-day moving average, or they're slowly going to creep down. Maybe some wild swings in between. But once the rate hike is announced, I think then things might get back to some type of calmness in the market. But I don't think it's going to happen until that rate hike is announced. Because investors are fearing, well, is it going to be 25 basis points or 50 basis points? What's the rate hike going to be? And what's the exact date, right? So there's a lot of FUD, fear, uncertainty, and doubt in the markets right now. And that's driving a lot of these wild swings. So with EV stocks, they're really losing their growth premiums. Like I said when I was talking about Tesla. That's why Lucid's down 14% today. There was a deep sell-off in electric vehicles. Tesla, Fisker, Nikola. Oh, should I say that one? And Rivian. Tesla's warning that the supply chain issues persisting into 2022, it just adds a cautious tone, a cautious layer that investors have been taking with the EV stocks since the start of the year. I mean, look, has Lucid really gotten into a new all-time high this year in January? No. That all-time high was reached back in November. Since then, it's been declining. It keeps finding new bottoms. I think it'll continue to find new bottoms. I do think the 200-day has kind of pumped the brakes there a little bit. But the potential for higher interest rates is seen cutting into the higher EV premiums based off of discounted future cash flows. That's it. Discounted future cash flows. That's why they're down. And that's why a lot of growth companies are down and growth companies are getting hit the hardest, where you're feeling the most pain. So, what we've seen in this market is people not buying the dip, but selling into strength. Whenever the market is going up, it's getting, we're getting 1% green, 2% green. Oh my goodness, we hit 3% green and then people are offloading their shares. They're selling into strength. And then that's why the market goes down in the afternoons. And then it gets pumped back up again the next morning, and then more selling into strength. Boom, down in the afternoon. I think this is a pattern we're going to continue to see. And I know I've said it like 5 times now, until rate hikes are announced. And that's not until March. So I'm convinced now that February is going to be a painful month. Painful month. So don't go buying the dip yet. Or better yet, DCA the dip. Dollar cost average the way down. Because we really never know when the bottom's going to hit. I mean, it could last until March, until the rate hike is announced and it's in stone and it's going to happen and we know how much. But until then, the stock market's going to fluctuate. That's why there's green candles and red candles, because it's not always going up and to the right on the chart. So just dollar cost average, because you don't know when the bottom is. And don't go crazy opening big positions at this moment in time. Okay, that's everything I wanted to talk about today. Thank you for the questions. I greatly appreciate it. Make sure to click the like button on this video. That helps YouTube know that this video is solid and it's got some good information. Second, make sure you take the URL and share it wherever you can. Post it on Twitter, Facebook, Instagram. It doesn't matter. Anywhere. Even Parler if you want to. Share it far and wide. That's our marketing budget. You sharing this video. So make sure to do that. That lets other people know that you think this video, it had some good information. And then third, click the first link in the description and become a member. You get instant access to our top 10 value, growth, dividend, and momentum stocks list. That's over 40 high quality names. They're constantly updated, so you always have the best names available. All right, ladies and gentlemen, thank you so very much for joining me. I'll be back here tomorrow around 5 p.m. to talk about the market, stocks, crypto, most importantly, what's on your mind. Okay, thank you so very much for watching, and I'll see you in the next video.